Real estate investing versus stock market. Which is better for you? You've heard the debate, but which one truly builds wealth? You're 20-something, ambitious, and eager to build wealth. You've probably heard people argue about the best way to invest your money. Some say real estate is the golden ticket to financial freedom, while others swear by the stock market's potential to grow your wealth exponentially. But which one is really the best for you? Is it the steady cash flow and equity growth of real estate, or the fast-paced, high-risk, high-reward world of stocks? In this video, we're going to break it down. The pros, the cons, and which investment avenue will set you on the path to financial success. Stick around until the end, because the answer might surprise you. Both real estate and stocks are powerful ways to build wealth. They each have their own unique advantages and drawbacks, but understanding them and how they fit into your financial goals is key. Today, we're going to dive deep into both options, weighing the risks and rewards, and by the end, you'll know which one fits your financial future best. So if you're serious about making wise, long-term decisions for your money, this video is for you. Real estate versus stock market. Step 1. The core differences. What makes them unique? First, let's break down the big picture. What are the core differences between real estate investing and the stock market? Why are these two even compared in the first place? Real estate is about owning property. You buy a piece of land, a house, or an apartment building, and over time, its value tends to increase while generating rental income. It's a more tangible, hands-on investment. You own something physical, and you're responsible for it. On the other hand, the stock market is about owning a share of a company. You're not buying a physical asset, but rather a small piece of a company's ownership. You invest in companies that you believe will grow, and your returns come from the increase in stock prices or dividends paid out by the company. Think of it this way. With real estate, you're the landlord. You're in control of the property. With stocks, you're more like a passive investor, hoping that the company you've invested in doesn't crash and burn. But while these two investment options are very different, they both have the potential to create massive wealth. The question is, which one is right for you? Let's dive into the pros and cons of each. We've covered the basics. Now let's get into the details. First up, cash flow and returns. How do the profits compare between real estate and stocks? The battle of returns, real estate versus stocks. Step 2, cash flow, the income you can count on. Let's start with cash flow, the lifeblood of investing. Real estate is known for generating consistent, predictable cash flow. If you buy a rental property, you can collect rent every month. That's money in your pocket that you can reinvest or use to build your lifestyle. Real estate also offers the potential for long-term capital appreciation. Over time, as the property's value increases, you can sell it for a significant profit, or just hold on to it and let the value keep rising. It's like getting paid to watch your house grow. It doesn't sound too bad, right? Stocks, on the other hand, typically don't provide that level of immediate cash flow. Sure, you might receive dividends, but the real money comes from buying low and selling high. The stock market is fast-paced, volatile, and it can give you huge returns, but those returns are often tied to the overall performance of the market. While real estate provides a predictable source of cash flow, stocks can be more exciting but also risky. If you're looking for stability and income that comes month after month, real estate might be the way to go. But if you're willing to take risks for potentially massive gains, stocks could be your answer. Now that we've talked about cash flow, let's dive into the big question. Which one offers better long-term growth potential? The long-term play, appreciation, and wealth building. Step 3, growth potential, real estate's appreciation versus stocks market gains. When it comes to long-term growth, real estate offers more stability. Real estate tends to appreciate steadily over time, although there are certainly market cycles. Think about it. People always need a place to live, and cities are constantly growing, driving up the demand for housing. Over the long term, a well-chosen property can appreciate significantly. But what makes real estate even more powerful is that you can leverage it. This means you can control a much larger asset with a relatively small down payment. It's one of the few investment strategies where your returns can be amplified by using borrowed money. It's like buying a car for $5,000, but then every time you drive it, it's worth $6,000. Real estate isn't magic, but it can sure feel like it. Stocks, on the other hand, grow primarily through the value of the companies you invest in. The stock market has historically returned around 7 to 10% per year on average, but it's volatile. One day you could see massive gains, and the next you could lose a chunk of your portfolio. It's not predictable in the same way real estate is. So if you're looking for steady long-term appreciation, real estate is your friend. But if you're willing to ride the waves of market volatility for the chance at massive gains, stocks might be a better fit. But before you decide which one is best for you, let's look at the risks involved. Both real estate and stocks come with their own set of risks. Let's break those down. Risk. What could go wrong? Step 4. The risks. Volatility versus property issues. Let's get real for a second. Both real estate and stocks come with their fair share of risks. With real estate, you're exposed to things like property damage, vacancies, and market downturns. A roof could need repair, or tenants might stop paying rent. If your property sits vacant for a few months, you're left covering the mortgage. Plus, in real estate, it can be hard to sell quickly if you need cash. The process takes time, and the market may not always be in your favor. It's like you've bought a house that comes with some baggage, but if you manage it properly, that baggage can turn into cash flow. Stocks, on the other hand, carry the risk of market volatility. While they can provide high returns, they can also lose value quickly during market crashes. There's also no guarantee that the company you invest in will perform well. But here's the thing. Real estate, while riskier in some aspects, is more in your control. You can manage your tenants, make repairs, and adjust rent prices. With stocks, you're at the mercy of the market and other investors. Both options come with risks, but real estate often offers more control and stability. So which one is better for you? Let's wrap things up with a final comparison and help you make that crucial decision. Final thoughts. Which is right for you? Step 5. Real estate or stocks? The decision is yours. So real estate or stocks? It all comes down to what you're looking for. If you want a hands-on investment that provides cash flow and long-term stability, real estate might be your best option. You'll have more control, and while the risk is still there, it's more predictable. On the other hand, if you're okay with more volatility and are aiming for high returns in a shorter amount of time, the stock market could be a better fit. But remember, stocks require a higher tolerance for risk and market fluctuations. Before you rush into either of these, there's one thing you need to know that could change the entire way you approach investing. Stay tuned for that last critical piece of advice. Both real estate and stocks are powerful tools to grow your wealth. The key is choosing the right one for your goals, risk tolerance, and time frame. If you're ready to make your move, don't wait. Start today. The sooner you invest, the sooner your money starts working for you. If you found this video helpful, like, share, and comment below with your thoughts on which investment strategy works best for you. Don't forget to subscribe for more investment tips that will help you build your wealth and live your dream lifestyle.